Welcome to the Bitesize Business School Videocast for March 2014. And the main topic of this videocast is going to be this post here, Upping Your Game, Balance Sheet Financial Intelligence for Entrepreneurs. And this is the post I'll be going over in this videocast. And it talks basically about the balance sheet, and it's the first in a series that I'm going to do on the financial statements, in particular the balance sheet, the income statement, and the cash flow statement, because these are how you measure the overall progress of your business, where you're at, how you're doing now, if you're progressing, what things are having an impact on your business, because you certainly need some way to figure out if you are progressing, because if you're not measuring those things, then what's the point? You're kind of just, in my opinion, throwing mud on the wall and just meandering. That's not something you want to be doing at all. You want to be able to measure your progress, look at where you were a month ago, where you are now, and compare it to what products are working well, which ones are not working so well, what things you've done in the market as far as marketing those products that have worked well. And so that's what this series is going to cover. And I think any serious entrepreneur will utilize this data to help improve their business. And I also want to talk about the podcast, which is episode number 2, because the podcast goes into details about what's going on in Bitesize Business School and what's going on in the book and the iPhone app industries. And in this podcast, I talk about the February sales for Bitesize Business School, which was a new monthly record. I go behind the sales and talk about how that happened. And then, of course, I talk about the different things going on in the industries. And that's why I've got the podcast listed here, because it does correspond to this post. The podcast is basically an abridged version of the post. And you can click to get it on iTunes here. And I'm going to very shortly dive into this post and begin discussing what it's about. But this is what happened in February with Bitesize Business School sales. Basically, it was almost 3 times the sales that I had in January. And so again, if you want to hear about the details behind that and my growth strategy that I'm going to begin implementing this year, you can get it all on the podcast. And also, here's my sign-up form to the newsletter, which you'll get the Entrepreneur's Guide to Info Product Marketing, which I think is a great way to save yourself time in researching potential products. It's the techniques I use. It's also going to be getting an update very soon to expand it. I think this is some great information at no cost to you, and you can get it just by signing up to the newsletter. And the newsletter goes out about probably once a month, so it's not anything you're going to be getting hit by a few times every week. And it will also announce the new podcast, so you'll get that information delivered to you through email as well. So we're going to go ahead and dive into Upping Your Game, Balance Sheet Financial Intelligence for Entrepreneurs. Upping Your Game, Balance Sheet Financial Intelligence for Entrepreneurs. I'm going to give you a quick overview of the balance sheet and just get right to the point about the important aspects you can use so that you'll have a knowledge of what the balance sheet is. If someone asks you, you can give them a real quick, maybe 1 or 2 sentence explanation of what it is and how it relates to the other balance sheets. And this is the first in a series of posts that I'm going to do that covers the balance sheets. And we're just going to talk about the 3, the income statement, balance sheet, and cash flow. The balance sheet is like a health monitor for your business. You want to know how well your business is doing. And there are so many variables, it's hard to keep track of them all without some kind of program like QuickBooks and even Quicken that you can take a look at what you're spending, what you're bringing in, and then what's left over. And what's left over, for at least the balance sheet, is called equity. The goal is to build equity in your business. And I'm going to be biased towards an online business. because there's very little assets and there's very little in the way of liabilities. So from your income statement, whenever you have a good month and you make a profit, that trickles down into the balance sheet and into the equity section. Now, the financial statement is a point in time. It's for a day, whereas the other two are for a period of time. The income statement and the cash flow statement are based on a range or a period of time. So in this series, why start with the balance sheet? Most of you are probably familiar with going straight to the income statement and looking at what's going on there. Well, the balance sheet is basically telling you the overall health of a business at that point in time. And you can sit on the balance sheet for quite a while examining the details of that business and get a really good idea of what's going on. You can tell if it's about to go bankrupt. You can tell if it's got enough cash to pay its current liabilities, its accounts payable, for example, that it's got enough cash to pay off the interest on its loans. If cash is maybe building, so you can take in the previous financial statements and look at this range of financial statements to see how well the company is progressing. But you can sit on the one current financial balance sheet and get a really good idea of what's going on. So the balance sheet structure is basically assets equals liabilities plus equity. So liabilities can certainly be negative, and that will decrease overall what the balance sheet balances. So on one side of the balance sheet are the assets. Let's say you got $100 of assets. On the other side, you got liabilities and equity. This side, liabilities and equity, also needs to equal 100. So the assets of 100 equals liabilities and equity of 100. So what happens with liabilities and equity that they equal 100? This would basically mean if you had $50 in liabilities, that's going to be a negative number. That means you got 150 in equity. So liabilities plus equity, which really means negative liabilities plus equity, are negative 50 plus 150 equals 100. So now the balance sheet balances. And that's what the balance and balance sheet means. These assets equal these liabilities and equity. When your assets are greater than your liabilities, you have positive equity. So in this case, we have positive equity because we have $100 in assets and we have 50 in liabilities, right? So that, and we had 150 in equity. So assets were greater than liabilities. And if you take just the assets and liabilities, you get 100 minus 50 is 50. So assets are greater than liabilities, and that comes out directly in equity. Equity is positive at that point. So assets greater than liabilities gives you a positive equity. Equity is like net worth for your business, just like an individual. If their assets are greater than their liabilities, they're going to have a positive net worth. It's the same for a business. Now, if assets are less than liabilities, you basically end up with a negative equity. And this might mean the company is on the verge of bankruptcy. This is not a good situation. But you also have to take it in the context. Maybe it's a startup. And in the beginning, startups can have those kinds of scenarios. And you may not be so worried about it if the startup is growing. And the startup is likely to be financed by investors, which means it has to get going quick because the investors are going to want a return. So it's got to grow and get to profit as fast as possible. So where does the balance sheet fit in? And I kind of hit on this a little bit earlier. When preparing financial statements, it's usually done in this order. Income statement, balance sheet, and the cash flow statement is last, usually. And there's a statement of equities, which we're going to leave out for simplicity. We're just going to cover the three financial statements. So let's say it's the end of quarter two. So you prepared your end of March quarter one balance sheet, Now you prepare your end of quarter two balance sheet. And in between is the income statement. And the income statement tells you what happened between quarter one and quarter two. So let's say the balance sheet at the end of quarter two has more cash. And you might be wondering, well, what happened between balance sheet quarter one and balance sheet quarter two? The income statement is going to tell you what happened. And at the bottom of the income statement, we get the net income. So the income statement, I'm not going to really go into details right now. That's going to be in a future podcast that will look at the income statement. But at the top of the income statement, you basically have sales. You subtract out the expenses, and you get what's left over. You get this profit or this net income. And that net income, let's say it's $200, that net income is going to go straight to equity on the balance sheet of the second quarter. That increases the overall net worth of the business, assuming the liabilities are not increasing faster than net income. But net income is going to go straight to the balance sheet, and that's going to increase your equity, assuming net income is positive. If net income is negative, it's going to decrease equity in your business. So if we look at an online business, we have very little assets, we have very little liabilities, because there's nothing physical involved. If there's something physical involved, that would change quite a bit. So if you have a storefront, if you have an inventory, that's going to change a lot of things. But because there's nothing physical involved, it's very what I call a lightweight business, right? There's no employees, there's no storefront, there's no investors involved, there's no inventory. It's very simple. And with that kind of business, it's not difficult to generate a positive net income, assuming you're actually making sales. And it's not difficult to generate a positive net income because there's not many expenses. There's no loans either. Or most of the time there's no loans for a very simple online business. So that positive net income is going to go straight to equity and keep building equity in the business month after month. But you still are going to have some expenses. So there may be software, there may be WordPress plugins, there's going to be design software, it might be video recording software. And if these are fairly expensive, a few hundreds of dollars or over $1,000, you're likely going to depreciate that rather than expense them. And so for me, for example, some of the expenses I might have are web hosting, music for the podcast, for example, that I've bought. I might buy some stock designs that I'll use in other designs. I might even buy courses. So those are kind of some of the expenses. So the takeaway of this particular episode for the balance sheet is this. The balance sheet is based on a specific day. It displays net worth of a business through equity. The balance sheet is able to tell you at a glance if the business is healthy or not. And the balance sheet adds positive net income from the income statement to its equity section, or it'll subtract net income from the equity, therefore decreasing the value of your business. This equity section is also called book value of a company. So those are just a few takeaways of what is involved with the balance sheet. And I hope that's been helpful. I hope it wasn't boring or mundane. I tried not to get bogged down in the details of the balance sheet. This is not a course or anything like that on all of the minute details about the balance sheet. This is just a very quick overview of what the balance sheet is and how it relates to the other financial statements, which we're going to cover in the future. Thank you for watching this episode of the Bitesize Business School Videocast, and I would encourage you once again to sign up to the podcast if you're not already a subscriber. You can do that in iTunes, and if you're not on the newsletter, I'd also encourage you to sign up there to get the Entrepreneur's Guide to Infoproduct Marketing, which I think you will find very valuable. Thank you again, and I'll speak with you on the next Bitesize Business School Videocast.